Hey, what's up guys? John here. 25 of the hottest markets for Airbnb are getting absolutely destroyed. Revenues are falling between 40 and upwards of almost 60% per month for these Airbnb hosts. And the blood in the streets has only really just begun. I've been talking about this for quite some time on this channel, saying that Airbnb, these hosts, these people that are buying into this massive mania are going to get absolutely wrecked. I mean, 1 year ago, I said Airbnb real estate investing is dead, completely finished. 9 months ago, the rise and fall of Airbnb real estate investors. 8 months ago, the Airbnb bubble just popped. And what I was looking at that time was rising inflation, Jerome Powell's indication that interest rates are only going to remain elevated and only going to continue to increase, a struggling consumer, tourism getting absolutely contracted. And we're going to witness even more pain for property owners, landlords, investors that are going to turn to Airbnb and increase supply. And there's going to be less demand. Obviously, rents are going to continue to fall. And in these videos, I was really kind of just backing everything up with facts, but I'm going to show you some of those facts, but some more information, because I think there's going to be massive opportunities to make money in this situation as well. If you're well positioned, well capitalized, with great credit, and you're really paying attention to the trends. I think that some of these hot markets are going to be the perfect place to pick up some of these great rental properties. Take a look at this information. It's pretty unbelievable. And I'm going to show you some other new regulations and restrictions that are also coming for these Airbnb hosts that nobody else is talking about. So please hit the like button. When you hit the like button, YouTube's going to share this content to educate more people about what's actually going on in the real estate market and the housing market. And if you want to fix your credit, we'd love to help you at my company, greatcreditfast.com. That's greatcreditfast.com. Go there, schedule a free strategy session. Take a look at this. So I saw this this morning. 25 markets, the top 25 markets. Bakersfield, California, down 39.2%. Denver, Colorado, down 39.6%. Bend, Oregon, 39.6%. Coeur d'Alene, Idaho, 39.7%. Mobile, Alabama, 40%. Medford, Oregon, 40.5%. You start to go through the numbers just between 40 and 43%. You have Fort Collins, Denver, Phoenix, Colorado Springs, San Antonio, Jacksonville, North Carolina, Fresno, Seattle, Port St. Lucie, all hot markets. Myrtle Beach, 47.9%. Phoenix, almost 50% down. Austin, 48%. Lake Havasu, 50%. But look at this. Look at this. Miami Beach is the #1 market for most Airbnb rentals. 3,400 Airbnb listings for every 50,000 people. That is absolutely insane. Well, we have to take a hard look at what actually happened the last couple years, because it was pretty incredible to witness. So 40% of all mortgages in America taken up between 2020 and 2021. Everyone was leaving markets like LA, San Francisco, Seattle, and they were going, New York City. They were going to places where there was no income tax, a very favorable lifestyle, very favorable business environment and climate. You're talking South Florida, Austin, Texas, Tennessee. Those are the markets that saw a ton of attention. People are looking at how much they were spending on just day-to-day living expenses in those expensive cities they were moving from as well, saying, you know what, $4,000 a month for a 1-bedroom. I could go to South Florida, buy a $900,000 house, $1 million house, and get tax benefits and pay no income tax. I mean, it's a win-win-win. And so everyone was running out there doing that. And then a lot of people were also saying, I'm going to do Airbnb. I can use this as a hedge against inflation. Inflation's record highs. I can buy hard real assets, and I could, buy a $500,000 property or $1 million property, and I can make, an extra $2,000, $3,000, $4,000, $5,000, $6,000 a month reoccurring revenue on this property. A lot of people are running out there. But look at this. Look at this situation, this dynamic that we're stepping into. Not only is that now not happening, and you have these golden handcuffs on these property owners. These property owners, they have these properties, 3% mortgages, 4% mortgages. The average property owner stays in their property for how long? 8 years. 8 years. That's average. But when you have an emotional buyer that moved from a market that they were comfortable, they called home, California, New York, they called it home, for many, many years, and they ran out there and they made a spur-of-the-moment decision to buy a property, is that buyer going to stay there for 8 years? Probably not. I would bet that they're going to stay there for half of that time. I would bet that they're going to stay there for a fraction of the time, because they want to go back, many of them want to go back to their own hometown. And so what are they going to do? They have 3 options. They sell the property, if they can, if they have equity. They rent out the property on long-term rentals, or they do Airbnb. But if you have a situation now where Airbnb rents are dropping between 40 and 55, 60%, and you have all these people that also want to now move back home, what's going to happen? More inventory. And you have an environment where there's going to be more inventory hitting the market with less tourism, higher costs, higher property taxes, higher insurance. You have a harder landscape. You're going to have more people leaning in to Airbnb. It's not just going to be people that want to, move back home, but it's also going to be people that bought properties. They overbought. They bought way too big of a house. They're way too leveraged. They didn't think that inflation was going to run this rampant. They didn't think that property tax and insurance were going to continue to run. And they definitely did not think that the world was going to get a hell of a lot harder. They all thought that it was going to go back to 2017, 2018, 2019 again. But that's all not going to happen. That's all not going to happen. And so what are we going to have here? We're going to see the markets that saw the most attention for Airbnb, I think, present the most opportunity for investors that are going out there looking to pick up deals. Because these property owners, these Airbnb hosts, they're going to really start to walk into some really, really big problems. For a couple other reasons as well. You have retirees, half of retirees in America, half of them, they're on poverty line. Half. That's a massive number. A lot of people thought that they had their retirement tucked away. What's happening now? They're on fixed income. They can't make it. So what are they going to do? They're going to sell their property and take this deteriorating fiat currency, or are they going to rent out their properties? They're going to rent them out, right? Plain and simple. You have people losing their jobs. What are they going to do? They're going to sell their properties? If they can, maybe, yeah. But if they can't, they're going to rent them out and they're going to put them on Airbnb. What I'm betting is that we're going to start to see rents nationwide really start to crater, really crater. Because these 2-3% mortgages, people are going to start saying, you know what? My mortgage is $2,000. I'll accept $2,100. I want to ride the wave. And then you're going to have builders saying, you know what? It costs me $450,000, $500,000 to build this property, but mortgage rates today are 7%. And if I were to refinance and hold this loan to 7% on a $500,000 property, it's going to cost me $3,500 a month. I mean, you're going to witness a race to the bottom for rents. That's what you're going to witness, a race to the bottom for rents. So if you're an Airbnb host, if you're a landlord, I mean, you want to be flexible. You want to be flexible today, especially considering that, commercial real estate, 1 out of 10 commercial properties in America will have to get refinanced from now until 2027. So we're witnessing this massive wealth transfer unfolding before our eyes. Residential real estate, long-term rentals, you're going to have commercial real estate. All of this is all coming to a head. That's what's happening. And as that's happening, cities, states, and local governments are going after hosts. Look at this. Proposed tax on Airbnb rentals could fund affordable housing. Now they position it as if, hey, these hosts are taking advantage of the market and we could take some of their money and we could combat inequality with it. Well, they said the same exact thing with the mansion tax. That tax is a tax on property sales between $5 and $10 million. They were taking a 4.5% tax at the time of sale. 4.5%, and anything above 10 million is a 5.5% tax. So for context, a $10 million property, 5.5% for that tax, 5% for realtors, that's 10.5%, plus escrow, closing costs, transfer taxes. You're looking at 13% on a $10 million deal. That's $1.3 million in actual cost. Now, did it go to affordable housing? No. It actually went towards building out legal networks to sue landlords and property owners to represent tenants' best interest. That's what happened in California. Look at Vancouver. Vancouver, now what they're doing is, this is a very serious issue. Growing concerns over illegal Airbnb listings flooded Vancouver's market. It says some people are actually not using their principal residence, using their investment unit as a short-term rental. That's not right. This is a very serious issue. For one, our city is experiencing a housing crisis and some people are taking advantage of the system. Well, many people would say the system's taking advantage of the people, right? That's what many people would say. And they're going to be going after these hosts, right, in Vancouver. In New York, Airbnb claims New York City's strict rules could spur a de facto ban on service, nation or citywide, right? And in Philly, Airbnb hosts must apply for licenses and permits as regulations go into effect, right? This just came out in January. So you're having all these cities start to crack down on their host. So the big question is, how are these hosts going to survive when they start to see their revenues really continue to tank? Because who's going to be traveling in 2024, 2025, really? Who's going to be traveling at the same rate as they were in 2020, 2021, 2022? They're not. They're not going to have the income. The cost of living is only going to continue to go up. Even credit card interest rates right now, they're over 20%. They're higher, far higher than they were in the great financial crisis now. People aren't going to have the discretionary income to go travel and to go stay in a nice Airbnb and do all these things. It's just not going to happen. We're witnessing something really, really big here. But I think that the people that are responsible right now, that they see the writing on the wall, they're going to make an absolute killing. They're going to know the markets in which they should be looking to invest. A lot of these Airbnb markets are going to offer immense opportunity, I believe, over the next year or so. And they're making very smart decisions right now. They're saving money. They are getting out of high interest rate consumer credit card debt. They're looking at balance transfer offers if they can get, accepted into one. We have to have a certain credit score, usually north of 730. But if they have good credit and they position themselves, cash in the bank, really good business with fat margins and low servicing costs, they're gonna do well. They're gonna do really, really well. But a lot of people that are thinking that this bull market is just going to continue to run, I think Jerome Powell is going to wake up the economy very, very soon. And I think that this economy is going to come to a grinding halt. That's what I think. I think we're in the greatest rug pull of all time. And I think it's naive to think that they're going to bail us out like they did in 2020 and 2021 again in the near future. I don't think they have the ability. I think that we're stepping into problems. But I think we're stepping into even bigger opportunities for those that are prepared. Drop them below, hit the like button, add me on IG, and if you want to fix your credit, we'd love to help you. We'd love to give you a free strategy session at my company, greatcreditfast.com. Go there, book the call. Catch you guys in the next video.